Hi, my name is Alex Carlucci with Gustan Associates. I'm going to talk to you about AUS approval versus manual underwriting. First of all, what is AUS approval? AUS is Automated Underwriting Systems, and that is a system that we all use. Every bank, every mortgage broker, we all use the same system. Fannie, Freddie, VA, FHA. And what it does is it analyzes all the inputs that we put in there. Your address, how long you've been there, do you rent, do you own, do you collect rent? How long have you been on the job? How much money you got in the bank? Do you have overtime? Do you have alimony, child support? Do you pay alimony? Do you pay child support? So it takes all that into consideration, and then it will approve you, or it'll give you a refer eligible, or it'll give you a refer with caution. So an AUS approved eligible is what you want to get. That means that it's looked at everything, if it's inputted properly, it's looked at everything about you, it's accepted it, and you can move forward and without any weird stipulations that are accepted, that are in that approval. It'll tell you it wants 1 month reserves. It'll tell you if you have to prove something a certain way because it read something. So as long as you honor what was inputted in there, you'll close your loan. As long as you don't have any odd background checks, because what doesn't come up on there is like a federal tax lien. Sometimes judgments won't be shown on a credit report or AUS underwriting system. Back child support may not come up there. So there's some things that can come up to haunt you during the loan process that AUS won't pick up. So, but if you don't have any of those bad things behind the scenes, AUS picks up everything else. And if you get approved eligible, we can close the loan. Now, what we do a lot here at Gustan Associates is refer eligible. What that means is that you've been downgraded to a manual underwrite. And a manual underwrite is where you have to fit certain qualifications for VA or for FHA. And for VA, all we need is 12 months clean, no lates on anything in the last 12 months, no judgments, and a debt to income ratio of 65%. And you have to pass a residual income test. Sorry, manual is 54%, I apologize. So debt to income ratio of 54%, 1 month reserves in the bank, and you have to pass a residual income test. And that's all VA requires on a manual underwrite. FHA has a different, more complicated tier. It's got 31 over 43, it's got 37 over 47, and 40 over 50 debt to income ratios. And each one of those comes with a different requirement. 31 over 43 just wants 1 month reserves in the bank. 37 over 47 wants you to have one of the 4 following items as compensating factors: 3 months reserves in the bank after you close, a residual income test that you pass, no payment shock from your current rent, so it can't be 5% or greater than 5% of your current rent. The new mortgage payment cannot be, or you have to have additional income that we're not using for your debt to income ratios currently, like overtime that you just started receiving 6 months ago or a year, because we can't use that towards the debt to income ratio. And then 40 over 50 requires 2 of those. So that's the difference between AUS and manual. So you want to get the approved eligible. If not, downgrade to a manual. That's what we specialize at Gustan Associates. And then if you get referred with caution, you're in trouble. So no one can help you really unless you're working on getting your credit scores up, or get some income, or get some co hours, get some assets in your bank, get a gift from a family member. So there's a lot of things you can do if you get referred with caution, but it's not good when you get referred with caution. We can't close your loan until we fix something tremendously with your file. And those are the difference between AUS approval and manual underwriting. So if you like the video, please like it, share it, and get back to us by leaving some questions, and we'll get back to you. Thank you very much.